Welcome to It's the Economy. The Indian rupee is outperforming Asian peers today after a sharp 1% cut that it saw yesterday in the wake of the incoming news yesterday of escalating exchange of fire on the Indo-Pak border. Today, an important development in the global currency market is the recovery in the dollar index to over the 100 mark after nearly 1 month. The last time it was above 100 was on April 10th. So you can see a distinct return of confidence to the dollar because of the signing of the U.S.-U.K. trade deal. To understand more about the Indian rupee, the bond yields which rose yesterday by 5 basis points, and of course how the macros could get impacted by the new border tensions, I have with me Neeraj Gambhir, Group Executive and Head Treasury Markets and Wholesale Banking at Axis Bank, Madhavi Arora, Chief Economist at Emkay Global. Madhavi, Neeraj, thank you very much indeed for your time. Neeraj, explain to us how you are at your treasury approaching the rupee. Is this depreciation to be expected? I mean, should we see more of it, say, towards 86, 87?
Yeah, I think so from both perspectives, whether it is the global currency moves, as you mentioned, dollar is now looking a little bit stronger compared to the recent past, and the fact that we have border tensions. I think both of these factors are currently working in some senses against rupee, and that is why we have seen approximately 1 to 1.25% depreciation in rupee over the last few days, particularly yesterday. Today, it's far more stable than yesterday, but I think market is in some senses waiting and watching to see what the next development on the border side, what happens and how this particular event unfolds over the next few days is going to be quite crucial. We have a weekend ahead of us, so what happens over the weekend and how the situation pans out is going to be quite crucial as we get into the next week or Monday. So it's a day-by-day sort of move in the markets, but clearly markets are a bit edgy at this point in time.
Okay. I'll just place for the record, Neeraj, the strength of the dollar. It is quite important today. The dollar is 0.9% stronger versus the Swiss franc. It is about 1.4% stronger versus the yen in the last 24 hours. And if you look at Asian currencies, it is about 0.8% stronger versus the Malaysian ringgit, and about 0.6 or 0.55% stronger than the Thai baht. In that context, the Indian currency is weak only by 0.14%. So today, the dollar is not strengthened much against the rupee. Obviously, if you take a 2-day average, then India would be a little weaker than other Asian currencies because of our specific problem. But otherwise, last 24 hours is a dollar strength story. Neeraj, I'll come back to the rupee in a minute. Just tell us about the yields as well. We saw a 5 basis point rise yesterday, and today I think the yields rose in the morning by about 2 basis points. So is that it, the answer to the tension?
I think the answer to that question is pretty much similar to what's happening in the currency markets, which is that the markets are a bit edgy. We have seen approximately 10 basis points move in the bond yields over the last 2 to 3 days. We would see how the situation plays out again today. Is a weekly auction. Friday typically the government of India carries out large auction. We will see how that auction goes out and what kind of bids we expect in the auction and the cutoffs that come into this auction. And that will also have a bearing on the bond market. But yes, I mean, if the tension at the border is contained and we don't see any significant deterioration from here, I would think that we are capped for the time being.
Okay. At whatever, 6.45, I guess, would be the cap. I think it's at the moment 6.44, the old tenure, and the new tenure is at 6.42. Madhavi, good morning. Thank you for joining in. I wanted to ask you, no economist so far has said that, but there is no question of tinkering with any of the macros. Is there, I mean, will fiscal deficit be higher or current account or anything at all because of the events of the last 48 hours and the worries on the border?
Latha, it's too early to really estimate how long this, this war could really stretch. As of now, our sense is that, it probably would see this de-escalation rather than escalation from here on. But we do not know, and we don't have a right precedence to this at this point in time, because Kargil Wall is not necessarily the right benchmark for us to assume that, whatever happened in the 1999 in terms of the fiscal response could repeat. But nonetheless, one logical thing is that you would see defense spending going up because the defense stock would be basically spent in this round of the war. If I look at the last Kargil, the last war of 1999, we saw the defense spending go by around 0.2, 0.3% the same year by the end of the year. So we may expect some kind of increase in defense spend. And at that point in time, the capex was massively hurt. There was a move towards defense rev spend, which reflected in the fiscal deficit also sort of widening by around 0.2, 0.3%. But again, we're in a different year. But that said, I think defense spending would definitely go up. So that has to be taken in account when we're doing our fiscal maths for this year, because the stock of defense would be now exhausted.
Yes, I remember I was a reporter then, and the currency had gone, I think, all the way to 49, if I'm not mistaken.
You were a very different economy back then. You can't necessarily compare
it was
India
also before the Y2K year.
Yeah.
And in a year, we saw so much of dollar flow because of the IT boom that was the rupee gained what it lost very quickly. And then, of course, we saw an appreciation all the way to 39 by the time it came to 2008. But that was a different period, as you say. Neeraj, your thoughts on the range of the rupee itself, 84, 85, 84, 86 or 84, 87, what would the range be?
It's been reasonably wide range in the recent past. As the Reserve Bank has allowed rupee to appreciate quite a bit in the month of April. So yes, we can go all the way back up to the 86, 86 and a half if this situation continues to worsen. We haven't yet seen any meaningful intervention from Reserve Bank at these levels, and they have allowed the currency to adjust. Largely also because the dollar has been strong, as you have mentioned. But, hard to take a very longer term view at this point in time. But I think in the near term, 86, 86 and a half kind of levels could be seen as where we might just kind of settle down for some time.
Yeah, too many moving parts. I actually intended to have a rupee discussion last week, wanted to invite experts like you all to discuss the rupee strength story and the dollar weakness story, especially after that May 6th movement in the Taiwanese dollar. Can you just elaborate a little bit on that, Neeraj? For the moment, forgetting about our dollar tension, can you really see the US arm twisting anybody to forcibly appreciate their currency, something like the Plaza Accord of 1985?
Markets have been rife with the chatter of what is being called as Mar-a-Lago Accord, which is basically Trump administration asking other countries to join in to collectively weaken dollar. So far, it has not really played out, and there is an assumption that in some of these trade conversations, that would also be maybe a part of the deal that might be worked out. So far, the U.S.-U.K. Trade agreement has not given us that sense, but clearly the Taiwanese, strength is pointing towards that direction. Also, Taiwan is in a pretty unique situation in the sense that Taiwanese corporates and residents actually own about $250 billion plus in US dollar assets, is what I picked up somewhere. And it's possible that some of that may be getting hedged, expecting that as a part of the trade deal, they will see strengthening of Taiwanese dollar. By the way, Taiwanese dollar moved by approximately 6% in a span of 2 to 3 days, which is per se not very large, but in the context of Taiwan dollar, which is a very low volatility currency, was seen as a large move. So we could expect some similar moves in other currencies as well when these trade deals are getting negotiated. In general, it feels like that the Trump administration may be more aligned towards weakening US dollar rather than, while on the face of it, they continue to say that they follow the strong dollar policy. But, it might be in their interest to see some more weakness in the dollar going ahead. This is to be seen against the actual data which is coming out of US. I think the US economy seems to be still in a fairly decent shape, right? The hard data that is coming out of US is actually quite supportive. And the fact that the Fed is on hold for some time, and we don't know how long they will be on hold, is also going to be supportive of US dollar. So currently they have a bit of a challenge to manage the strength of the US dollar.
To control the strength of the US dollar. Yeah, I take your point, but the chance of asking all countries to appreciate their currency is very tough now, according to experts, simply because China will not bite. And if China is going to keep its yuan weak, then other Asian countries, ASEAN countries, cannot oblige. But that's a different debate. Today we are in another geopolitical situation, so let's stick to that. Madhavi, a final question to you. What is the inflation number expected tomorrow? I mean, expected next week? And will that actually push yields lower, assuming, of course, that the war doesn't escalate?
So, Latha, generally, any kind of war is inflationary in nature, right? So, the medium-term impact is always a supply-side hit that should ideally be, pro-inflation or lead to a higher inflation. But near-term, I think we are not looking at any big inflation worry. March month, we are sort of tracking, headline inflation pretty much sideways around 3.3, 3.4. So that's not a big worry for us. But I think for the year as a whole, also, we are tracking inflation sub 4% overall, unless, of course, things, change around the world and we see a very different world around us. But as of now, I don't think inflation is a big worry for central bank per se to really change their stance. I think a large part of the reaction function move would be led by the global dynamics and probably to some extent the FX move as well. I think I'll be very closely watching that. Domestic market, I think domestic economy is pretty much under control. You are not looking at a fiscal expansion at any point in time for the center, at least, even with a assumed defense spending, which could be a tad higher in this fiscal year. We'll have buffers around, especially with regard to RBI dividend and stuff, which could lead to the fiscal deficit be contained at 4.4%. That's not a worry. Inflation, again, as I said, would be close to on 3.8% for the year as a whole. So again, shouldn't be a big worry for central banks. It'll be the global moves and the very patchy global dynamics, which could actually play a very important role in the action function of RBI.
Fair point. Thank you very much. Out of time, but yes, the tensions on the border, an unfortunate human and humanitarian development, but at the moment, it's not very disturbing to the macros at all. That's the word coming in from the experts. But the inflation number, if anything, that will come next week is likely to be 3/4. So the question of bond yields going up immediately don't look likely. The only thing is people were expecting that the repo cut could go all the way to 5.25. Now the market believes that perhaps only 2 more cuts and not 3. That's the only change I have seen in the mood among bond dealers. That's it on this edition of It's the Economy. A break and then Chartbusters.